FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is 6/3/20. Well, where do you start? Between social unrest, between economic fallout from the pandemic, you got to wonder where all of this is going to wind up. All too often, we just look at the United States and think, that's where it's happening. All the important things, that's what the world, what's going on there. Well, wrong. All we have to do is look to our neighbors to the north to see that really it's not just the U.S., it's all over the globe. Well, I want to know what you think. Where are we? Is this a depression? Email us, kl@kerrylutz.com, kl@kerrylutz.com. Let us know what you think. So Danielle Park is with us. And Danielle, things are really looking bleak north of the border, aren't they?
Yeah, we're having a very rough time up here, and I'm afraid we're not nearly through it. I think we're still in the job loss phase, not the job creation recovery phase. And, if you look at the stats, you guys have lost over 40 million jobs. Canadians have lost well over 3 million jobs. We're about 10 times less than you in terms of population. So our ratios are sort of on track with what's going on with you. We have had, again, many of the same conditions coming into this, like, you are our largest trading partner. So we've always been economically very tightly tied to you. China's our second. So you can imagine, the whole blowing up of the virus and the shutdown that impacted China, of course, had a major impact on Canada because so much of our cash flow in the last, say, decade has been incoming investment dollars, particularly in our real estate markets, our commercial and residential real estate space, particularly from places like Asia, China. We have large Chinese communities in Canada in our major cities. We've had a huge influx of international students over the years, which have brought their dollars to our universities and colleges. And of course, the rate that they're charged is 2 and 3 times what domestic students are. So our institutions have really become quite dependent upon the international flows. Our real estate market was quite dependent on international flows, and all that really has shut down. Even the rental market, when we see, we've had in 2017, the Bank of International Settlements warned that Canada had the most overvalued real estate in the world relative to incomes and relatives to rents. And things got worse from there in some parts of the country. And again, what happened was there was a lot of speculation and flipping and a lot of people presuming that prices would only go up. And what's happened in the last 3 months with the shutdown, the stop of all the travel that's happened, we have now, the amount of properties moving from first of all, forced selling, which has already started, where people have to sell because they have lost their incomes. 45% of the working population in Canada is on this government replacement benefit of $2,000 a month. Wow. It's called the CERB. So we have almost half of our workforce reliant on government income just to pay their bills. Then we've got millions of loans in deferral, mortgages, car loans, credit cards, personal lines of credit, all this in deferral for up to 6 months. But that's time finite, right? That's coming up in the fall when there's this presumption that everything will be back to normal and people will be able to start paying their bills again. Of course, I think that's pure fantasy because, it took a decade to restore the lost jobs after the 2008 recession. And, we're not even through this one in terms of into the recovery part yet. So it's going to be, I think, a lot longer to build back than it took to lose, clearly, in the fastest decline in the last 3 months that we've had. on record. So it's been a massive financial shock. I think people are, in the short run, they've been kind of hopeful that there would be some kind of a quick fix, like a vaccine or something. But of course, the reality of how that all works is that it's not a quick fix. It's at best maybe, months and months away sort of thing. Right. And then even then, how do you get the population inoculated? How to, production? I mean, there's so many issues. So it's not like it's going to arrive next week to help us. And in the meantime, some 40% of small businesses report that they may not survive the next few months. And this is the job generating center of our economy, is the small business sector, right? So there's just, it's like a nuclear bomb went off in the middle of our economy. And it's not even perhaps the rebuild is not even something one can envision right now because the damage is still unfolding.
Yeah. Hey, and the good thing is you haven't had that much social unrest yet, not like here in the U.S. for sure. I heard some rioting in Montreal. But yeah, so a lot of these jobs that are lost, well, people have been furloughed, right? So it's not like they were fired. It's not like they lost their job yet.
Right.
And yet. We definitely have to add yet. But point is that a certain number of them will be hired back. And you have to wonder, I don't know if Canada's done the equivalent of PPP, payroll protection program, where you trying to get
small business loans where they can be deferred, $40,000 loans where they can be given a $10,000 let's see, you can have $10,000 forgiven if you direct the bulk of the funds into keeping payroll
retention, going. Right? Employee retention. So it's similar to what we have here, except it can all be forgiven here. And that probably will help, although most people couldn't figure out how to put in the application. It's only for 2 months. I think in the U.S., with the social unrest, what's happened, the rioting, I think that's kind of ended our lockdown. I think our lockdown is officially over because the rioters certainly weren't social distancing, although a lot of them did wear masks for sure. But what do you think is going to bring us out of this, Danielle? Because it's bigger than the central banks. It's bigger than the government. It's a worldwide phenomena. And with China being in the dumps, the United States, all these other states, Western Europe is reopening, but still a lot of it hasn't gotten back up to steam yet. That's all going to come back to China, and China being over leveraged, and a lot of malinvestment into assets. I mean, it's not just Canada and the United States. It really reverberates around the entire globe.
FSN Radio. It's all about what's next.
Arcana Corporation is on the verge of bringing the world's highest grade silver mine into production. The Revenue Virginius mine in Colorado has proven improbable silver reserves grading nearly 37 ounces per ton silver, with an all-in sustaining production cost of only US $8 per ounce of silver. The mine is fully permitted with infrastructure already in place, and the company has announced they plan to commence production in 2020. Achieving successful production usually results in a significant upward share price re-rating on the Lassonde curve. Arcana trades under the ticker AUN in Toronto and AUNFF in New York. To learn more, go to arcana.com. That's AURCANA.com.
The Financial Survival Network. It's all about what's next.
It really does. And, first-time home buyers up here, young couples, just out of college buying their own homes are looking at properties that are $700,000. And my heart goes out to the whole mess. But on the other hand, we have parents who are borrowing money against their own homes to try and help their 30-something children into properties they shouldn't be buying because they can't actually afford that, or they're going to be so in the red for so many years just trying to pay the shelter costs. So, I think the mean reversion episode I think this whole pandemic has brought us closer to the debt jubilee tipping point, which will eventually have to happen. It certainly started in the corporate sector. Now, central banks have started buying corporate debt to try and prevent bankruptcies and the investor class from losing the money that they've wagered in this highly speculative market. That's a mistake because there's just too many people wanting bailouts and rescues and free money. One of the most shocking things that, frankly, I was following with your PPP program there is the amount of asset management firms, so my industry, who got massive amounts of money from this program that was supposed to be for small business. These are companies, some of them with $1 billion and more under management. So my first thoughts that come to mind are, number one, they're supposed to be financial experts. They're supposed to be well managed financially because they're in the business of giving financial advice to others. So all of a sudden they need to have bailouts in the second month of any kind of disruption with asset markets near all-time highs. They've had a record run of collecting assets and fees. They've been heavily enriched by government subsidies the past few years, by central bank subsidies. And here they are collecting massive amounts of free money from taxpayers. So free for them, not for you taxpayers. And this is the kind of thing that, will just perpetuate the nightmare, the mess, this is not what small business funds are meant to do. And we have to stop rewarding people for imprudent financial management. If they'd been managing the assets correctly, so their response would be, well, we lost a huge chunk of assets under management. So our fees dropped, so we need help. Well, why did you lose a huge chunk of assets under management? Because you wagered them in highly reckless and speculative ways, and you damaged people's life savings in a very dramatic way. And in the process, you hurt your own fees because the assets dropped so much. But again, that's not the sort of thing that we should be bailing out and rewarding. But that's constantly what we do. We go back to that over and over and over. I was telling you just before the call, I've been reading Thomas Piketty's latest book, Capital and Ideology, which is really thick and huge on history. And I can only do it a chapter at a time. It's really a lot to digest. But one of the chapters that I just finished reading before this latest, disaster with the death and the uproar that's happened since is the whole issue of when they were ending slavery in different countries around the world. The focus was all about how do we compensate the slave owners, nothing to do with how do we compensate the people who have been enslaved and suffered great, setback and oppression and now have to start from nothing and, will struggle for generations. How do we compensate the slave owners? And the one example was that the 4,000 most wealthy families in Europe received the equivalent of 30 million euros each in the 1700s, which was, how did they get that money? They borrowed it. The government borrowed it to give these uber wealthy families millions of euros worth of capital to make them even richer in compensation for taking away this, quote, free labor that they owned. And that was the great imbalance, So in many ways, that's the thing that's never been addressed. They keep making the same privileged rich people richer and more privileged, and they never address the great divide that has emaciated anyone in the middle and left whole generations of people without hope. And that's not just in America. That's all over the world. That's been the model, and we've got the finance and the banking sector, frankly, as the number one, perhaps the war machine is the second, the industrial military complex, but the finance sector has been at the receiving end of all the government largesse and all the taxpayer contributions for decades and decades. And it's really created a big mess, a huge holes in pots that are essential and gross and grotesque enrichment and empowerment of sectors that don't deserve it. And that is, I think, at the very base of the mass inequality that's causing uprisings. As you were saying, when people have got nothing left, they have nothing to lose. So why wouldn't they fight back? Of course they should. But, and how to express that in a positive way rather than in a way that just decimates all the local businesses and sets the community back even further. And unfortunately, that's what we're seeing now, right? So I just think that in Canada, we don't have the same kind of race relations on the same scale that you have, but we definitely have, and we have a healthcare system, social network, which helps a great deal because people don't lose their homes when they get sick, as an example, or, have to go massively into debt if their child's ill, that kind of thing. But we have to address this. I think it was Stats Canada noted that 39% of the jobs in Canada can be worked from home permanently going forward.
Same here. I think
okay,
that's
and 61% of them can't, but a lot of them can be subject to automation. So again, this pandemic has accelerated a trend, which will be to how do we downsize our physical premises, our real estate concentration and expense, how do we get people working from their homes, and how do we replace the people who can't work from home, right? How do we increase automation? The other major theme, frankly, and this goes back through centuries and centuries, is taxation is going to increase, right? If you look at the stats, the corporate tax rate, as an example, was above 50% in 1982 in Canada, and similar trends were seen in the United States. By all the way into the 2000 area, when the tech boom was going, it was still north of 40%. In the last decade, it has fallen to 26%, the corporate tax rate. That's been the same all over the world. Well, if you look at what happened in a similar period of great, financial collapse and great social inequity and uprising and unhappiness in the 30s, capital gains and corporate tax rates nearly doubled in the decade after that, and personal tax rates went up about 150%. So I think the property owners, the people who can consume, that are receiving income, they're going to have to pay a lot more. It's coming. Whether, you can say whether you like it or not, whether you agree or not, it doesn't matter. The fact is that there's big holes all over the place. There's going to have to be a debt jubilee, which means that owners of those assets are going to have to lose money because there won't be enough to bail them out all the time forever. So I think it's the people that have the assets that are going to lose. It's the people that have the income that are going to pay more. And there's going to be this huge multi-year process of directing more resources to the groups that are so volatile right now because they are so destitute.
Yeah, well, it's a big problem we've seen in the U.S., and I'm sure it's happened in Canada as well. The entire tax base has disintegrated. Yeah. No taxes are getting paid right now. And then you add the debt from your equivalent of PPP, and you're in just as much trouble, if not more trouble, than the U.S., especially with the oil dependency, because the oil market still, we're getting back up, but it's decimated the Canadian energy sector. Just totally shut it down. And it's doing the same thing in the U.S. Danielle, I don't remember if we talked about it, but remember, like the May futures contract for oil in the U.S. went negative for the first time ever. And when you start seeing these markets breaking down, the repo market, which was a staid market, started, I think, in either 1913 or 1914, had very few blips on the screen. But then in September, we saw it collapse. And that was the sign. I knew it at the time that that was the beginning of whatever was going to happen, because that market just doesn't have problems unless there's major underlying problems. So Canada is kind of up the creek without a paddle. Your leadership right now really on either side of the aisle doesn't know what the heck to do.
I don't think truthfully, I think anyone in power when this thing hit would be hard pressed to have quick answers. And the problem is that the political process has become focused on and maybe it always was, Kerry, focused on sound bites and quick, throw some more money at this cause and that cause. And this is much more challenging than how do we just throw a few more dollars this way or that.
Yeah,
This is how do we reconstitute so many things from the ground up. I think it's, what Neil Howe calls the fourth turning,
yes.
that episode in history when everything starts to come apart, and it's extraordinarily messy. But on the upside, it is a period of rebirth through all the devastation and disaster, because the old institutions no longer can serve. The duct tape has broken apart, and now you literally have to build from the bottom up. And that's a longer term prospect. That's not a quick turnaround. That's not a V. That's more like an L
or a W.
Like a hard work and holy cow, how do we get through this? And it's multifaceted. And no one group gets to keep their privileges and not have to give. It's a give to get environment.
Well, we're going to see. It's going to be interesting because there's so many interests that are opposed to one another, and there are no solutions to it other than kind of to burn the system down and start all over again. And there's too many people who are getting filthy rich off the system. And the system has served the bulk of humanity probably better than any other system in history. So it makes everybody really nervous to just start all over again. And then where do you start? Do you go to a more socialistic system or a more capitalistic system? And the system that we have in place is a hybrid that has evolved over several hundred years. Nobody set it up, just like the currency systems. It's all ad hoc in response to issues that have arisen.
I think also it's the debt system. So again, at the end of a debt supercycle like we are. So the way I've mentioned this before, I saw politics the past decade or two of just like throwing just placating the masses, right? So basically corporations and finance and the main, industries sucking out in a disproportionate share, being bailed out at every blow up, totally corporatocracy and social benefits for the corporations. On the other hand, you've got these social groups, let's call them, who basically were on an unsustainable path as well. But the way that they were told was, here, take some more debt and you'll be happy. Take some debt, borrow some more money and get yourself a new car. Borrow some more money and get yourself a house. All these things. And as long as they could keep adding to the tab on both sides, the masses didn't really perhaps pay much attention to the looting that was going on the other end, because they thought they were getting something too, right? Whereas now, when it's stretched so thin, when the resources are so clearly overwhelmed by the need and the demand, we're not even talking about the investment that's required for reinvigorating all the infrastructure and all the reincarnation of our major systems that needs to happen, which has to come out of something. If you've literally got no savings and you've already got record debt, you have to fund it somewhere. So again, you need to increase the income that's flowing. How do you do that when you've got a deflationary environment? When, in Canada, all our growth in the last decade has come from the real estate sector, which is now coming under enormous pressure. The banks, we just reported, our Canadian banks have finally started increasing their loan loss provisions. They were embarrassingly low for the last few years, even though it was obvious they were understating it. Well, that's whacking their earnings very significantly. One of our banks just cut its dividend for the first time since, in over 30 years. So this is the credit cycle is having its way here, just as it did in 2006, and just as it will let's face it, lots of places in the United States have also had a mini real estate boom in the past few years, with lots of free money flowing and cheap debt again. So I think, once people understand that the price of their house is going down, that their equity that they thought was there is actually negative, when they can't keep the roof over their head and all the sort of trappings that they thought were evidence of progress start to fall away, I think that's when, you get to the nerve of the thing. And the nerve is that most of what we've been doing is completely unsustainable. And it's hard to paper that over now. And so, it's a function of, it's going to be crisis management. But I guess at the bottom of it is, nothing ever happens unless there's a major crisis. Let's face it, because again, in the path we've been on has been unsustainable for a long time. But as long as you could keep throwing a bit more credit at it, people could just carry on about their way. And then what you've seen in past revolutions is that it gets to a point where people can't eat. When they literally can't function, they can't keep up appearance of any kind. That's when they just say, okay, fine, we might as well rush the ramparts because there's literally nothing left to lose.
Yeah. And we're getting close to that in many areas. Anyways, we'd like to know your opinion, like to know what you think about this, how it's affecting you, because I know many of you have been really negatively impacted by this, and we feel what you're going through. So just write us an email, kl@kerrylutz.com. Let us know. Anyway, the Twitter feed's @KerryLutz, Facebook page, Financial Survival Network. And of course, go to Danielle's site, jugglingdynamite.com. And Danielle, we'll talk to you in a couple of weeks.
Thanks, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.